Greetings to all our viewers. You're watching India Inc.'s Dream Budget right here on NDTV Profit. We've been getting to you a slew of industries and their wish list from the Finance Minister. Today in the spotlight, I've got the oil and gas sector. Lots is on the wish list for the oil and gas sector in terms of incentives, tax holidays, and also some clarity on subsidy sharing as well as the overall subsidy burden that the industry is facing right now. With me in the discussion this evening, I have got with me Mr. R.S. Butola, the CMD of IOC, Mr. L.K. Gupta, the CEO and MD at Essar Oil, as well as Mr. Deepak Mahurkar, leader of oil and gas at PricewaterhouseCoopers. Gentlemen, thank you very much for joining in and giving us the wish list for the oil and gas space. Mr. Butola, let's start off with you first. Just a broader layout of what the sector is expecting from the Finance Minister come March 16th.
The sector expects a lot, but I do not know whether a budget is the right forum for meeting all the expectations of the industry. But certainly as far as the taxation are concerned, there are certain pressing issues which we have proposed before the Ministry of Petroleum, who in turn have also proposed before the Ministry of Finance, and we expect that there will be some of the resolution of those. And more importantly, one of the most important issue which is facing the industry at this point of time is the issue of whether there should be a certain stable mechanism for sharing of the under recoveries on sale of the sensitive products. So while the industry has been requesting that while sharing can be agreed as the government decides, but it should be on a firm and stable ground. Everybody should know that what the mechanism is going to be, and we do not know. It is our expectation, but we do not know whether this wish will be granted in this budget or not. But certainly in terms of the provision, in terms of the direction, it will be an indicator to us. And similarly, there are demands on the tax side also, where the industry has made collectively certain demands which we expect should receive the due attention of the Ministry of Finance.
What are the expectations in terms of addressing the subsidy burden that the sector is currently witnessing? I mean, the original budget was about 24,000 odd crore rupees, but that seems to be getting surpassed.
Yeah, you're right. The original budget provision was 24,000 crores, and the government has already sanctioned to the oil marketing companies 45,000 crores. Besides the compensation, around 36,900 crores, which they have got from the upstream companies. So this 24,000 has already been exceeded, and we do hope that there are still huge under recoveries before the industry, because the gap that was envisaged in the beginning and which has turned out to be is much larger. Even today, the under recoveries before the industry for the whole of the year are expected to be 1,40,000 crores. And if I look to the period gone by, which is 31st March 2011, that means first 9 months, the total under recoveries, I have the figure for the oil marketing companies, are 97,300 crores, out of which 36,894 to be exact, which is about 37.9%, or let's say 38% of the total under recoveries has been met by the discounts received from the upstream oil companies, and 45,000 crores, which is approximately 46%, that has been provided by the government. This still leaves an unmet gap of 16% of the under recoveries which have to be compensated, and this itself in absolute numbers becomes a huge sum, about 15,400 crores. So that's already the shortfall which the industry is facing, and what the industry expects that for the current quarter, the under recoveries on these three sensitive products are likely to be 43,000 crore. So that means there is already a shortfall of 16,000 plus 43,000, so that makes it approximately 59,000 crores. Plus on top of that, there are under recoveries on the petrol also, because of in the first quarter of the year, financial year, it could not be increased. So there is an under recovery of approximately 4,500 crore likely to be for the whole year. So that takes it to more than 70,000 crores. So that's something 63,000 crores is still unmet recovery if I take the whole year. So that's a large sum. We expect that the government will provide due support to us.
All right. Mr. Gupta, you want to come in on this? You think that the government has enough leeway now to help out with the subsidy burden? And also the fact that, probably having an inclusion of crude oil and other petroleum products under the GST would help a bit.
Yeah, what I would like to say is that being the private sector refinery and having set up a very big retail network, what we would expect the government to ultimately come to a situation where the diesel and petrol both are deregulated, and that will certainly help the government in a big way in eliminating the subsidies, and also will help the country as a whole in managing the demand, because today when prices of crude oil gets increased or the product get increased, the general public is completely insulated from that price rise and they don't feel the pinch. So if the price increase and decrease, that will also help us in managing the demand, and will certainly eliminate the subsidy, and also will provide a level playing field in the marketing for the public and private sector, which will ultimately help the consumer only. And as regards GST, yes, we are definitely looking forward that going forward the government comes with implementation of goods and services tax, as they are saying. However, what we hear is that the government is trying to keep the petroleum products out of GST, and we have been working with the government, representing the government, that petroleum products should be covered in the GST regime, because that will only then be able to completely neutralize all the input tax burden and will be revenue neutral. We will also, what we will also expect the government in the coming budget is that on tax holidays, presently the concept of one PSC, 1 year for tax holiday, because the development of fields, as you know, takes several and many years. So if you start first well, first year, the last well may be 7 years, 10 years hence. So keeping all that as one certainly is a big discouragement to the industry.
All right. So GST, Deepak, is going to be a big push for the industry for all petroleum products. It's going to help out on a higher level.
The constitutional amendment expected to be moved keeps the petroleum products out of GST, which is a major anomaly that will get into the petroleum sector. To get that out, it will take years, maybe decades. So one of the foremost the industry is asking for is try and keep that in GST. However, the rates could be what are today. The challenge even in that circumstance is that currently there isn't any decontrol on some of the petroleum products, which are diesel, LPG, kerosene. In that situation, applicability of GST might stick some of the taxes onto the petroleum companies rather than their ability to pass on to the consumers, or even adding to the exchequer's booty. With that anomaly remaining, it's like chicken and egg today. You don't have petroleum products price decontrol, but on the other side, GST might come in, which then becomes a sticking cost to the petroleum companies. Whereas if you have decontrol and then GST comes in and you wait for that, we're going to miss the bus. So rather than petroleum companies just talking about these specific GST applicabilities, I think the government needs to work on having both these agendas push forward in terms of decontrol and GST applicability
simultaneously.
That's right.
Right. Mr. Butola, do you believe it's a slight bit of a double-edged sword here when you're talking about deregulation as well as GST in the same sentence? You need to probably look at giving both a push simultaneously.
No, certainly, and I entirely agree with what Deepak said. We have also had meeting with Mr. Mr. Modi, who is the Finance Minister of Bihar and heading this group of the Finance Minister, and we have made various representations, and our plea is, which Deepak also said, that please include in the constitutional amendment bill, and if you want to retain some taxes, there could be mechanism through separate taxation or in the rules that the timing could be decided, the mechanism could be different, but at least these products should be brought within the frame of the constitutional amendment. So that's the foremost request which the industry has made today.
And Mr. Gupta, I want to come to you with this, that particularly the E&P activities for oil and gas, that should be exempted from service tax. You think, that is a fair enough wish from the industry and that should be paid heed to?
Yeah, it's a very, very fair and reasonable demand from the industry, because all offshore oil gas platforms, I mean, they have been exempted from the excise duty and VAT. And since they have not been exempted from service tax, so this amounts to service tax getting stranded there. So this is a very fair and reasonable demand from the industry, that when you do not have excise duty and VAT on those service activities, so there should be no levy of service tax also there.
Deepak, not just this, but even deductions under section 37, which says, exploration, drilling and exploration in overseas blocks should be given some deductions.
Indeed, this is something which the industry is, in my opinion, fairly demanding. All said and done, these are costs which are incurred by the companies in pursuit of equity oil, which is in the larger ambit, energy security move. If some of these companies which are spending billions of dollars overseas are not getting deduction for overseas expenditures, whereas the anomaly in the industry that you see is that otherwise all other activities meant for export as well as import are included in that, and this remains to be a demand. We really do not know what is the genesis of this particular exemption having been taken, and the industry wants to redress on this particular aspect.
Aside of that, Mr. Butola, tax holiday, the extension from 7 years to about 10 years is being asked for. It's a capital heavy, capital intensive industry, and you're not even going to be looking at breaking even for the first few years, so let alone taking advantage of the tax holidays that you're getting. So the extension of this period of tax holiday is also a recommendation from the industry to the finance minister.
Yes, certainly this is one of the recommendations which the industry has made, and there is comparison available in the power sector, where out of the first 15 years choice is given to the companies to avail any 10 years benefit. So the similar demand has been made by the petroleum industry also, given what you rightly said, that the investments are huge, they are capital intensive, and it's very difficult out of the 7 years, that's the limit currently, that you don't really make profits for first 3 years or 4 years, and if that be the case, then the period left essentially is 3 to 4 years with you, in which you are not able to avail the full benefits.
Deepak, it's a wish.
Yeah, let me put this in another perspective as well. The definition of infrastructure status in different bodies of the government and different acts and laws is different, which is being felt by many industry groups, not only oil and gas sector, in terms of its uniformity for a long time. Just few weeks back, we saw the government moving upwards and saying that we want to uniform those definitions, and some of those large sectors have been declared to be covering another ambit of infrastructure. Subsectors are yet to be defined, so we are yet to see the upstream sector to be brought under that ambit, and by virtue of which we will get tax holidays. Every time when the infrastructure status is being thought of from tax break perspective alone, there is a challenge, because the industry gets a lot of other advantages in terms of funding as well, which they are deprived of, just because of the fact that this 7 versus 10 and 10 amongst 15 years infrastructure status tax break is not being addressed to. Coming back to tax break of 10 between 15 years, E&P industry is such that you invest first, and then start reaping the benefits in initial years, start making profits after that. Right. So to make this sector attractive and make the investors to come into this, whatever tax breaks are being given need to be put from the perspective of its attractiveness to the investors and not just as a provision.
Right. All right, I'm going to take a short break right here, just 2 minutes more, and we're going to come back and discuss the oil and gas wish list in greater detail. Welcome back. You're watching India Inc.'s Dream Budget right here on NDTV Profit. Today in the focus is the oil and gas sector. With me is Mr. R.S. Butola, Mr. L.K. Gupta, as well as Deepak Mahurkar. Continuing the discussion. Mr. Gupta, I would like to pick up that point. How can you make the sector more investor friendly?
The ATIB exemption, which is coming to an end on 31st March 2012, should be extended at least for 12th 5-year plan, that is up to 2017. Because India, as you know, is slowly getting the advantage and becoming the export hub for petroleum products. And if we were to avail and continue to get the benefit, because this is a major exporter of India being major exporter of petroleum products, the government should encourage it by extending this tax holiday and therefore this is also essential because petroleum refining industry is a very high volume but very low margin industry, and in the beginning you have heavy burden of interest and repayment, and virtually the sales tax benefits going away from the scene in time to come. The only benefit to the refineries will remain is the income tax holiday. The refineries are also subject to a lot of under recovery which they will have to take care. So it's a very fair and reasonable thing that the government extends this, and this only will make investors think of further investment in the refineries.
Getting your point on that front, this sector needs the funds, it could do well with the funds, and investor friendliness is what needs to come in. Aside of that, when we're talking about tax holidays, and Mr. Butola, I want to come to you with this one. Another recommendation in terms of limitations of tax holidays is that, in the oil and gas sector, a single undertaking, with a single production sharing contract can avail of tax holiday, and that is a little bit regressive and also a little inconsistent with the other sectors. You think that needs to change a little? There needs to be some more clarity that comes in, and it needs to be amended that each and every single undertaking with a separate development plan can be brought under this ambit?
Yes, certainly that's one of the demands which the industry has put, that each and separate venture be treated as a separate undertaking, which in fact it is, because if you, let's say, taking the E&P example which Deepak also mentioned, that if you drill a well in a particular area, it might have a potential to give production which is adequate based on one well or two wells, and there is every reason that you take your decision on the basis of your investment in each well, and if it's going to give you the output that you think is profitable. So if that be the case, there is every reason and rationale that these should be treated as a separate undertaking, and then there shouldn't be any limitation, because the idea is to promote E&P and the petroleum industry in the country, and the idea is to attract more investment because there is need. The India is still deficient on the energy resources, especially oil and gas. So if that be the case, there is every need for these incentives to be there, which will really give a big fillip to the industry in terms of additional investment, additional efforts which will they be making in drilling and exploring wells.
This applies both to upstream wells as well as pipelines in both contexts, but let me take the first one first. The provision last year made for removing those tax breaks under undertaking raises more questions than gives answers. Obviously, what stands for the other industries? So you add another power generator, you add another stanter, you add another unit for manufacturing in any other industry, you start getting undertaking tax breaks. Whereas in oil and gas, in upstream, if you add another well with the provision that came in last year, we are not going to get tax breaks. By the way, a well or a set of wells could produce substantial quantum of revenue and profits for that company, and one wonders as to why tax break should not apply to it. Well, that would come under one specific policy of the government as to how they want to take this taxing policy forward. But then the question is that it has been applied retrospectively as well, and which is what has set the oil and gas and upstream industry back. Same thing applies to pipeline industry, 35 AD.
Right.
It applies to the undertaking or that particular balance sheet, and not the other costs which are undertaken under the same balance sheets, and you don't get offsets against that. So why is this discriminatory treatment being given to the oil and gas industry is a question the industry is asking, and I guess we need larger answers for that.
Mr. Gupta, and I want to come to you with this on tax holidays for natural gas production and profits on that from blocks of NELP 8 and on the CMB 4 for that matter. Aside of that, there are no exemptions given. You think that this scope needs to widen a little, and all blocks from NELP 1 up until NELP 8 and all under CMB should be given this leeway?
Yes, absolutely, because when this all these blocks were awarded, there was absolutely no clarity as to the fact that the gas is not part of the mineral oil. I mean, world over, and even in income tax in other sections, the gas is part of mineral oil, and therefore the investments were planned considering that there is a tax holiday available, and to that extent it will certainly be helpful if the government clarifies that all the projects which are covered under NELP 1 to now are covered under this exemption. And this is also important because we are, as I mentioned, we are highly deficient in terms of crude oil and gas, and therefore we should do everything possible at our command to see that the investments are promoted in this, investments are facilitated, the entrepreneurs are encouraged to invest in this, and the government of course will get benefited in the end by way of profit petroleum or profit gas, whatever you want to call it.
I'm running out of time here, but I quickly want to come to each of you all to ask you all what is that one thing that you are awaiting the finance minister to roll out for the oil and gas sector. Mr. Butola, let's start off with you.
I think I'll retain my first answer which I gave, that stable certain mechanism for sharing of the under recoveries of the sensitive products, petroleum products.
All right. Mr. Gupta?
We would expect the government to provide level playing field in petroleum marketing for private sector refineries who are doing marketing, and of course implementation of GST.
All right. Deepak?
I would expect the government to talk about long-term structural changes to the oil and gas sector policies and regulatory regime, which obviously covers the taxation policies also, to be dealt with rather than tinkering with small things. I think that's going to do service to the energy security purpose of India.
All right, the wish list is exhaustive. Whether or not the finance minister can help out the industry in this budget or the next goes to see on the 16th of March when he announces it. Thanks, gentlemen, to join me in this discussion, Mr. Butola, Mr. Gupta, as well as Deepak. Thank you very much for taking out the time and speaking with us right here on India Inc.'s Dream Budget.
Thank you.
Thank you.
And thanks for watching.
A lot of people are saying that there should be a tax of 80,000 or some different amount on diesel vehicles, and we very strongly believe that if something like that happened, it's going to really have a very negative impact on the growth of the industry.
Today, if you look at it, there is no big push on the innovation side from the government. Even the tax on R&D, the exemption on R&D, the in-house R&D is kind of expiring in 31st March 2012.